Hey, welcome back. As I mentioned in the Alibaba video, I think looking into Chinese companies might be a good idea since there are a few very important developments recently, so let's have a look into JD. This company has a different business model than Alibaba and Pinduoduo. They are an integrated retailer, buying everything, having inventories, warehouses, all the logistics and so on. Alibaba, in comparison, is just a platform that offers services to you as a company. You sell there, you pay a fee, that's basically it. They don't buy your product. They delivered a bit of growth, but this was during an environment that wasn't necessarily friendly for them, which might be about to change. We see them growing very well in recent history, especially for a retailer, being among the best in the industry overall. The issue is the company's margin. Despite theoretically saving a lot of costs by owning its supply chain, JD is a retailer, which almost always means low single-digit margins. But still, they can make a ton of money thanks to very high revenues that are growing very well. They can make around 4.5–5 billion per year, placing them at a ratio a bit above 10. That's not amazing, but it comes after a roughly 50% increase since a few months ago. That increase has to do with China's shift in policy. I talked more about this in the Alibaba video, but simply put, they are changing the policy to something similar to what it was in 2010 after the crisis. That should have really good effects on the economy, especially on the consumer demand, meaning that JD could benefit a lot. Financially, we see a very healthy balance sheet with the current assets almost covering all the liabilities because they don't have that much debt. We see 42 billion in equity on a 50–60 billion market cap, which again isn't amazing, but it's after a huge increase. In such a position and with the recent rate cuts in China, they can easily issue billions of debt and develop in other countries or buy suppliers or whatever to either make more money or save them. They are developing in other things and currently offer insurance and pharma services as well. If we think many years into the future, this has potential to become something similar to Amazon. China already has some mini Amazons, so it's not really something that uncommon. When I say Amazon, I mean a massive corporation that can do a lot of synergies between the businesses that it owns. You know, maybe not Prime, but they have the logistics, physical and digital, that can benefit a lot of industries in many countries. Why I mention this is because they also plan to offer 2–3 day deliveries in many countries, like Alibaba, by 2025. Getting that makes sense given the company's different business model, and they could maybe do something to improve the margin. That's my main issue with the company, and generally speaking, I'm not a fan of retailers, especially the brick and mortar ones, but this one is online, so that's a plus. To give you an idea about the size, they make more revenue than Alibaba, which is huge, but the cash flow is around a fifth or even less. That's why the market cap is also around a third or a quarter of Alibaba's, and it shows the importance of cash flows and profit versus the revenue. By the way, Walmart owns some JD until August 2024, but they announced a full exit, which obviously made them crash. How relevant is this for JD? I don't know, but the same as SoftBank selling Alibaba, I don't think it's really an indicator about the company itself. The same I said for Alibaba, this is more about the market's opinion on China rather than how good these companies are. China has some very powerful companies, but until the country proves that it's investable again, they can remain very cheap. I don't think anyone is denying how cheap or healthy Alibaba, JD, Pinduoduo and the rest are at this point. Again, if they were American, this could have been 3, 4, 5x more expensive. Not to mention that by proximity, they have a much better exposure or potential in SEA and other high potential regions than a normal American company. They pay a dividend of a bit over 2%, similar to Alibaba, and recently announced another significant buyback program, again similar to Alibaba. 5 billion over 3 years means another roughly 3% per year, so not terrible but not amazing. So they are very similar to Alibaba, but the businesses overall aren't really the same. The ratios are very similar, but JD is a retailer, so it's always going to be cheaper. Sure, maybe not 10x the cash flow like today, so it has potential on top of the growth, but a company like Alibaba can even get to 30–40x, so relatively speaking, it's more undervalued, let's say. Again, China has its own mini Amazons, and especially JD's logistics system would probably actually fit all of them. Remember, Tencent is a $500 billion company, so buying a part of JD wouldn't be tough. This one should do better by itself, but a spin-off like Alibaba wanted to do could unlock some value, especially since other companies would probably want part of the logistics that they have. In both cases, it's not even about them needing the money, but the market recognizing the value in the parts of the business rather than trading them together but at a discount. Now let's see a valuation. In a bad scenario, let's assume the change in policy doesn't work and it doesn't attract the market on top of competition affecting the growth. Let's say they make 4 billion per year traded at a ratio of 8, which is on the cheaper side of popular Chinese companies. That's a market cap of 32 billion, meaning a price of 20.12, so almost half of the current level. Coincidentally, that's almost exactly the lowest point ever, but it can always go even below, of course. Now, in a second scenario, let's say they keep developing in China and other countries. Maybe buy some local suppliers, logistics and so on and grow at 8% per year, which is well below the company's average even in the current environment. Assuming the same margins, we get to around 7.05 billion in half a decade. For a ratio of 12, similar to the current one, that's a market cap of 84.6 billion, meaning a price of 52.64, so around a 50% profit. With a maybe higher dividend, this can be overall pretty good and they would afford to pay significantly more. In a better scenario, let's say they ramp up the growth, maybe get some debt and we really see the shift in policy help. Maybe also develop into some higher margin industries locally and in other countries. If they grow at 12%, so still below the company's average, that's 8.46 billion in half a decade, say 9 on a better margin. For a ratio of 20, assuming some recovery in market sentiment for China, that's a market cap of 180 billion, meaning a price of 112. That's around a 3x on top of potentially significant dividends and buybacks. So it definitely has potential, especially if the market's opinion on China improves, even if they do worse than previously. Anyway, if you want to support the channel and see if and when I buy this, check out the Patreon link below. I went with some more conservative estimations, but it can definitely do even better on top of this potentially being an acquisition target. I prefer Alibaba overall as a business, but JD isn't bad at all. I bought some more Alibaba recently and even if I don't have any JD, it's a stock I'm considering. Again, very good financial health, nice cash flows, potential to develop, all coming at a pretty attractive price. It's ultimately more about China than it is about the companies, but they seem to be on the right track to improve. I think the shift in policy can be very beneficial, especially for a company like JD that's very exposed to the consumer. Anyway, if you enjoyed this, check out the Alibaba video as well. I actually own some of that and I think it's overall more undervalued. As always, what I cover in my videos shouldn't be enough for you to make any investment decision, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out and make sure to subscribe. Thank you for watching and I'll see you next time.